Well, good evening, all. Ira Epstein, and here we are on the 24th of November, 2025, and the time right now just after 7 p.m. Central Time. I've got to get used to doing on my portable computer all these updates again, so they'll look a little strange at first, but I'll have it all smoothed out probably in a day or so. All right, so let's talk about these markets for just a minute here. What you're going to get is the producer prices coming out tomorrow morning at 7:30, then the advanced retail sales data for September coming out at 7:30 a.m. Redbook weekly retail sales will come out, and they'll come out at 7:55. The Case-Shiller 20 U.S. Metro home prices for September will come out at 8 o'clock. The Richmond Fed will update their monthly manufacturing sector index for November, and that'll be out at 9. The Conference Board U.S. Consumer Confidence Index will come out at 9 o'clock. And last but not least, at 3:30 in the afternoon, we'll get the August business inventories. Well, let me say this right. We'll get the August business inventories at 9, and then the API numbers, which is right here. You can see I made a mistake by not having that drop down another line. Again, please put up. I'm trying to get this done. I am, as like everybody else, people from out of town, and I'm actually moving my house. So it is a true mess. What's been not a mess is being long the gold market, which I've been telling my clients to be here and starting to take some money off the table. I'm looking at the stock market. It's mixed tonight. You've got the Dow down. You've got the Nasdaq up. You've got the Russell down. So, you've got different markets trying to do different things with the S&Ps basically unchanged. The dollar index is up 18 as most of the currencies are wishy-washy at this hour. And the grain markets are still under some selling pressure. They haven't been able to come up, and we're not seeing it up in terms of where's the big buyer, China. We're not seeing anything out of it yet. I understand the presidents, plural, Xi and Trump did talk today, but what's come out of it, I don't know. When I look over at the energy markets, I still remain in the bear camp, and you'll see why in a minute. So as we look at the S&P, you can see how the market made a breakdown towards the 18-week average of closes and popped itself back up. When we start looking at this chart, you're going to see it's still got a pattern of lower highs, lower lows. So it's been a nice bounce, but so far it's a bounce in a market that hasn't broken its downtrend. In addition, the market has not been strong enough to even get up to the 18-day average of closes in the red. So what it's done is it came down, it hit the 18-day moving average of closes, found its support, went back up to and trying to get back to the 18. But even if the market were to go straight up and through this high right here this day, it doesn't matter. You'd have a lower low, higher high. There's no real chart set up here to work from yet. When we take a look at the E-mini S&P 500 here, you can see it hit the 100-day average in the Bollinger Band for the support. And in the slow stochastics, they got oversold and they're trying to turn up. All right, I would call the trend down. The market got oversold, giving you a bounce, but I don't think I can label it beyond that. In the Nasdaq, it's quite similar. The market still has lower highs, lower lows. You can see that very clearly here. It came into the 100-day average and right through here, as you can see, the Bollinger Band, and gave you a 2-day bounce. The momentum was oversold and it's bouncing. You have not turned the trend back up. The same thing is true of the Dow. You hit the 100-day average, the Bollinger Band, got oversold, you're bouncing, but you've done nothing to turn anything up here. And in the Russell, this became the strongest. It got to the 18-day average and took its prior rally high of 2411.90 out and got you to the 18-day average. Then when we sit by the DAX, you have lower highs, lower lows, still looking to me like it wants to come down. When we step over here, we can see a higher high, lower low in the D's 10-year note. When we step over to the 2-year, it's the same pattern. There's no trend in the interest rates whatsoever. The dollar index is still bullish, but overbought and lacking the power to punch through the upper Bollinger Band, it appears at this time, while the euro is in a downtrend, oversold, and lacks the power to go down, at this point at least, to the lower Bollinger Band and this key moving average, the 200-day, to see if it can find support there. In the Japanese yen, we hear threat, threat, threat. They're going to intervene. As I told you in the morning, if you were listening, in my interview, when I did the morning flash, I thought the market would have great trouble, and it still is. I don't see a problem there. I think if the bank intervenes, the big boys wait. They let the bank intervene, and then they sell into the bank and keep testing the bank. In Bitcoin, a bounce. Nice to get one finally, $4,500, 5%. It's not getting enough recognition. That might have been it. You might have gone far enough now where the market can start to play around. You lost the bearish embedded reading is my rationale for saying that. And in doing so, if today you can stay up with this with a reading over 21. You really didn't lose it yesterday. You got up to the 20 level. You need to close over 21. But if it can do that, then I think you can get back up to the 18-day average. It might be a combination of this number falling and prices rising. As we go over to the Brent, crude oil, lower highs, lower lows. As we sit here in the WTI, you have a higher high and a lower low. I don't see anything fresh for that. And as we take a look at January heating oil, higher high, lower low. Really nothing fresh there that I see going on either. Last but not least, the natural gas. You seem to be finding a home at the 18-day average of closes with resistance at the 100-day. So we get a lot of information tomorrow. The question is, what do you do with it? The question is, will it propel the markets higher? Have we come off the gold with about $100 an ounce rally where it's done enough and there's nothing left in it? Or is the market going to try to back off? There's a lot of questions. We get into thinner markets. Pay attention to all that. With that, I'm Ira Epstein. You have yourself a great evening. Watch the other updates, and I'll catch up with you later.